So let's get this started. First and foremost, I think a further round of introduction, which is not just about like name and title, but more so, who you are and what your protocol/company does. We can start from you.
Yes. Hi everyone. I'm Madalina. I am a UX engineering lead here at Ostium. Previously, I have worked in traditional finance at BlackRock, but also in DeFi. Ostium is a gateway to global markets for on-chain users that want to access deep liquidity off-chain.
Hi everyone, I'm Justin Alick. I'm the Quant and head of risk at Perps.fun, an up-and-coming exchange where various folks can list perps on almost anything, particularly tail-end stuff. Thank you.
Hi, my name is Dany. As mentioned, I'm head of DeFi trading. We are at Raven, we are a high-frequency trading firm. We market make, but we also run all kinds of proprietary strategies. Yeah, I am an engineer by heart. I understand a bit of mathematics, but not really compared to some of my colleagues. But yeah, these days we do prediction market, real-world assets, like binary options, everything, including, of course, spot, perps, etc.
And I'm Huff. I'm the founder of Pear Protocol. I'm a trader by background. Users come to Pear to build all their pair trades and their basket trades. We're built on top of Hyperliquid, and they come in and do those kind of strategies on our platform.
Beautiful. So something Dany said actually got my interest immediately when you said you guys also do prediction markets. So I'm really curious, like market making on prediction markets, like what is actually market making on prediction market? What does it look like operationally speaking? Is there like sufficient volume out there? Which kind of markets do you guys like typically do, and how can you actually make the endeavor like genuinely like profitable?
So yeah, prediction markets, it's super interesting because they're so different from what we usually see in perps, right? The spreads are huge, the exchanges charge multiple percentage fees per trade, which is unheard of. But this is what happens with non-linear products, right? Something is 20%, you buy it, it goes up to 40%, that's 100% return. And that's not something that you can easily get by doing leverage on existing platforms. There is a lot of volume, which is very strange how it exploded all of a sudden. I think it was with the 2024 election. That's when it started to go up. Yeah, these days we make everything. How do you make, how many bots are gonna pass the Strait of Hormuz, or how many tweets Elon is gonna post this week? It's all statistical arbitrage. We are wrong a lot of the time, but on average we are better than the average trader. And we collect the spread, we get, that's it. And it's the really interesting thing there, and when it's actually picking up a lot, and this is why we see 20 billion valuation at Kaushi from like a week ago, which is insane. Sports. Sports betting is now legal in 50 states. They really regretted that one, but
yeah. Interesting. Thank you for that. And yeah, I also wanna since going about the introduction you guys did, Justin, you just said about Perps.fun and about allowing other people to request listings and listing stuff on Hyperliquid. So what is from your experience like the most requested type of asset that teams or companies are like looking to launch on Hyperliquid, and then what are you most excited about?
Yeah, you'd be surprised how often people come up to us with a bunch of crazy ideas, and sometimes I have to tell them like you're trying to drink milk out of a wine glass, and sometimes it's actually feasible. We can actually redesign or like use a perp to express a contract in a different way and replicate like really interesting ideas. And without getting into the details of exactly like what people have approached us with so far, we can say we've had at least about 50 different inbounds on various different products. Sometimes it's like more unusual TradFi stuff, and sometimes it's just your mom and pop like coin that people want to list. But it's really the exciting stuff in between that kind of like I think is the more engaging stuff that day to day.
Interesting. And then I want to ask you, like in all this, where do you see Ostium like playing a role in the current like landscape? Because you guys are trying to like differentiate yourself a little bit from the herd. So I was wondering, like in practice, like what that actually means, and how do you guys see yourself like in the whole like perp play? Yeah.
Right. So first of all, we are an RWA, real-world assets trading platform. And this means global markets, stuff like commodities, oil, gold, FX, indices, ETFs. And these are markets that already have real depth of chain. These are traditional markets. So what Ostium is trying to do is to create a bridge, like a gateway, for the on-chain users that still want the self-custody, the on-chain settlement, the transparency. We're trying to give them access to the liquidity that exists off-chain. So here is the key differentiator for us.
Beautiful. And going similar question to you, that similar to the one I made to Justin beforehand. Like in your experience and from like a privileged standpoint, running per protocol, what is the most interesting like pair trade that people like trade the most or are interested in trading the most that is not available yet? And how do you see, like the expansion in terms of like asset class, asset types, and so on?
Yeah, so I'll zoom out there. Crypto used to be the case where you wanted to be long only. I want a long Bitcoin. I want a long this whatever meme coin or whatever it might be. And the industry has kind of evolved. People are maturing now, so many more people are doing these long-short kind of strategies. What we're seeing on the platform is people doing thematic long-short. So they're doing things like being long hype and short maybe a basket of other things like Aster, Lit, GMX, etc. We're also seeing people trade a lot more of the equity perps and the HIP-3 markets. So things like being long the memory bottlenecks like Micron, SanDisk, etc. And then maybe short Ethereum against it or short Apple against it. So those kind of thematic trades. And then the final piece that we're seeing a lot of volume on is people building their own basket trades. And these can even be long only, right? And so I like to think of those as custom ETFs. And it's one of those unique things that only really crypto can enable at this stage. So we see people building their own baskets and rebalancing them. And it is very much akin to building your own custom ETF on chain.
Where is mine?
I have a question about the custom ETFs. Do they get the same efficiencies as normal ETFs?
In terms of tax or?
No, in terms of cost to enter, cost to exit.
Yeah, so everything is perps based, right? So the big variable is going to be funding, and you have to keep an eye on the funding rate, especially if you're being long only when you trade these things. I think one of the main benefits of doing these via perps is you get the 24/7 markets, you get pretty tight spreads on all this stuff, and rebalancing is actually like a pretty trivial event. You can do that on a daily basis and run algos to do that, and we see traders doing that.
I would like to also ask you, like, have you guys ever, like, what do you see pair trading as something that is interesting, or like in general, because it's a different protocol point of view,
Actually, yeah, I think we just chatted before the panel. I think it would be very interesting, and it would be a very good use case for Ostium as well. This type of strategy, 100%.
Nice. So, Dany, initially, like when you were, describing the general landscape of prediction market, you mentioned like election, right? So typically in the prediction market has, a booming event when there's like a U.S. election in general, like U.S. geopolitical events are like definitely a driver, a factor. But we're now seeing like the volumes, like grow, not just because of that. I wanted to get like your insider, point of view on what is the driver factor, behind the growth of the prediction market. Is it just something that is more cyclical depending on this kind of events, or it's just picking up and growing altogether?
We've seen very consistent growth across the whole broad spectrum. So your main categories are your political contracts, you have crypto derivatives, and then sports, roughly. And you know, the political ones, economical, like Fed decisions and stuff like that. But the volumes have been extremely consistent, and not only in those, like we haven't seen an election since everything blew up. Even around the previous election, they weren't that popular, not really. But yeah, the majority, again, it's unfortunate to see, but the majority of the volume is in sports. Just because it's a very established industry, people love to gamble. We can argue about the derivatives, how gambling they are. Like, it's hard to make the case that a 5-minute BTC contract derivative is useful for anything but gambling. People are not really cashing in on the UI though. We have a UI expert, but it's, yeah. In general, the volumes are there. It's still yet to remain on the crypto derivatives if there is actual customer interest. And for example, one thing that's super strange is they have all these symbols. You have BTC, ETH, Solana, XRP, Doge, whatever, 95% of the volume BTC, 3% ETH, and 0 on everything else. So, yeah. But again, if it remains to be seen after the dust settles, people don't get paid the big bucks, like spreads come down, fees come down, if there will be actual interest from retail that market makers have to compete for. For sports, it's absolutely there. It's not going away unless they regulate it, which might happen.
Interesting. And I want to ask Justin, like the concentration that we're seeing in terms of like volumes on certain products is currently like becoming, you know, bigger and bigger. Before it was mostly a crypto-driven industry. Now, especially on Hyperliquid, we're seeing like the open interest and the volume in general is becoming less and less crypto. There may be one or two dominating assets, and then the rest is just, you know, RWAs, or which, you know, also goes back to what we were saying earlier. So, is this like, do you see this as a natural evolution of the market? Do you see this as something that, and how is like, you know, like Perps.fun maybe ties into that?
Yeah, I think clearly we're seeing this evolution in the space where people are migrating away from coins that, you know, have historically not seen success over the past 4 or 5 years, and people are consolidating into things that are much more, have a lot more longevity, let's call it. So trading commodities that, you know, where there isn't necessarily a systemic disadvantage compared to people who maybe bought instruments at a much lower valuation in private markets as opposed to buying them in public markets. Or people want to explore derivative products, like even in the prediction market space, where the user finds himself in a much more, in a space where there isn't necessarily an edge against them. And I think that's clearly the way the market's going to continue to evolve.
I want to ask the same question to you also as well, because you know, like you said, Ostium is focusing a lot on that. Yeah. So, like, which kind of products do you see people trading the most now, before, and like, you know, what's the trajectory is going to be?
Yeah, actually we've seen lots of trades for commodities and indices. Yeah, I think our biggest trade was like a 36 million long single shot trade, yeah, on one index, on the US 500 index. The way we see it is that we realized there was not enough volume in general for RWA trading, yeah, for RWA assets. So what we realized is that all this liquidity actually exists off-chain, and we try to basically create this bridge, and I can actually go into more technical detail if you'd like. But yes, we've seen that there is actually real demand for stuff like commodities, stocks, indices, and people want to trade a narrative in general. They want to trade the story, the fact that gold is moving up, oil is breaking out.
Interesting. I think this comes a natural question that comes to my mind is there's we have seen multiple venues list stuff that looks similar, right, on the front, but then it becomes a factor of a very, very, very small details, like in the Oracle implementation. How does this asset behaves when the market is closed, for example? So to all of you, in which order, but also, to Justin to start with, because he is apparently having the burden of work with partners to design these markets. What is the, how is a market actually designed? How do you actually take something that exists on the traditional finance and bring it, to on-chain?
Sure. I mean, I think there's clearly, without naming any names or products, there are certainly instruments and perps that have been listed at multiple exchanges, and one will clearly have multiples, magnitudes of volumes against the other, perhaps simply because there is a sufficient market maker available there, and maybe that market maker is there because they have an ownership or a rebate towards the fees. So these structural advantages make a big difference, clearly. And sometimes it's just distribution, when one group just has more attention than the other.
Smart. That's smart. I want to also hear your take on this.
We were one of the first market makers who did, because we partner with exchanges launching prediction markets on the real world assets, and they really want to trade 24/7, and they want hourlies on gold on Saturday, or okay, gold is a bit better because we already have tokenized, which is quite liquid, like PAX-G. But for example, on Brent or other stuff that is 23/5, and it's a complete mess. I don't even know where to start. It's such different thing that happens on the weekends that needs very custom handling, and it's very interesting. I completely agree. Without naming the names, but we know who they are. Those markets are extremely liquid, and they all have for perps, you need these special rules about the funding rate and how it behaves on the weekend, so people don't get liquidated through spikes. Very interesting. Unfortunately, we don't see that much, it's not as developed on prediction market as it is the crypto segment, the binary options. But with sufficient liquidity, and when the market makers like us get our shit together and actually start quoting decent spreads without losing shit ton of money on the weekend, maybe the retail interest is gonna come.
And just one thing I would add to this. So on Pear, we have 4 Tesla perp contracts. Exactly. One by Felix, one by TradeXYZ, one by Dreamcash, and then one by another provider, Kinetic. And what we've seen users do is they've seen these and they've seen arbitrage opportunities. And to my point earlier about how traders are evolving, we've seen them trade Tesla versus Tesla, even on the same exchange, on Hyperliquid. And so I think this space is you're right, it has some teething issues, but it creates incredible opportunities for people that are paying attention to funding rate arbitrage or dislocations between oracles and things like that too.
Yeah, that's exactly also what I want to dive deeper on the Pear protocol side. So first and foremost is how are you guys seeing the behavior of users when it comes to multiple of this apparently the same asset, but then when you dive deep, it's the way the oracle is implemented, and after hours and the weekends, it's important. When it comes to pair trading, and then what do you think a traditional sophisticated player that is used to pair trading or even traditional trading comes to the on-chain world, and then sees a situation like this where you have 4 Tesla listed on the same exchange? What do you think it's the reaction there, and how can we try to make this a place where it's easier to navigate into this mess?
Yeah, so on the first one, definitely some people get caught, right? And it's a UI and UX problem to make sure that they're aware of the risks. Some of these markets are isolated-only markets, for instance, and you have to make that at the forefront of their kind of knowledge base. And some users have been caught up in this, right? And Hyperliquid is guilty of not having the best kind of UI and UX around flagging some of these risks on some of these different contracts. I think for the institutional users that do this, they are fully aware of what they're doing and the opportunities that they're taking. And I would say that it's driving more and more volume to places like Hyperliquid and Ostium as places for price discovery. And that's what we're really like seeing on the weekends with the pre-IPOs and things like this. These venues are becoming prominent in the mainstream as to where price discovery takes place. And we can argue whether that's the real price or not, but like that is the price the market is deciding. They want to buy these stocks at 230 or whatever it might be.
Interesting. And especially because this is like a UX also problem, right? I wanted to ask you, like, maybe it's a provocative question, but doesn't this whole like fragmentation, you know, in terms of like multiple of the same asset reminds you maybe a little bit about the early DeFi days when you had like multiple wrapped asset, multiple of the same. I mean, I know it's a different thing because we're talking about like something different, but like on a UX standpoint, is this something that will find its natural evolution, will be solved, or it's just a winner takes all at some point in terms of, or yeah.
Right. So first of all, I think, yeah, market discovery is super important. There are people that want to trade whatever happens in the world. They want to trade certain themes. They want to trade certain contracts, and they definitely care about liquidity. However, Ostium does not have this problem. For us, it's a little bit different. We're actually having our in-house Oracle, and basically the infrastructure is built in a different way. For us, our infrastructure basically consists of three important layers. First of all, you have it's like three big things that work in full sync. It works like a triad. So first of all, you have the smart contracts for the on-chain settlement. And then you have the Ostium's in-house Oracle that gives you the real-world underlying asset price. And then you have the hedging layer. We don't build this like on an order book. So it works a little bit different. You're not going to see like on our platform the same asset multiple times. Yeah, but market discovery is super important. I think you need to have access to all of that.
Absolutely. And also this like makes me think about there's, you know, a huge difference. It's not just a difference. It's you know, it's an approach. On Hyperliquid, for example, Hyperliquid decided to go on a builder-deployed model. So, you know, they decided to like let other teams deploy their markets. So you have more of a modular and you know, quasi-permissionless approach. Of course, there's you know, like stakes that can be slashed and so on and so forth. And then, for example, on other venues, you have more of a monolithic approach where you know, like it's the exchange does everything end to end. So what is the, you know, the benefit of one versus the other, and in your opinion, like what is, but it's a question for all of you.
For us, the opportunity was that we wanted to access the traditional markets that are already there. We're talking about markets that already have so much real depth off-chain. And let's be honest, like RWAs needed that. It's different than anything that's crypto native. So I think this is the first step for getting more traction for both on-chain users and traditional traders that don't need to be DeFi experts first. So yeah, we're trying to do the onboarding easy for them as well. But yeah, that's our point of view.
Justin?
Yeah, I think consolidation is definitely ahead of us in terms of having multiple listings on various different products. It's not unusual to see a delisting, and I think you know, we're going to end up seeing a lot more of that over the next 6 months or so.
What do you think about that, like the permissionless deployer versus monolithic approach in your experience, you know, as a market maker?
There is a product for everybody. It's very difficult, and we've seen a lot with hybrid perps. Like Hyperliquid is less a hybrid perp, it's more like on-chain order book, and they have their own thing. But we have like so many exchanges that are off-chain and then set on-chain, which still allows people to manage their own money and do all that. Polymarket, limitless, predict, all of these prediction markets that step on the polymarket architecture. But they have a huge problem in that being permissionless also means they tend to get banned by a lot of institutions and in a lot of countries, which is a huge problem. This is why, you know, Polymarkets is now losing volume to Cauchy, because Cauchy is there, Cauchy is regulated. It took everything, it's taking a lot of the volume. Everything works great because it's their own software, you just have to make it work. And Polymarket, we've seen attacks on chain and issues with their contracts where people would, yeah, this is a real order, and they would keep it. They would keep the market and then withdraw the money from their account before settlement, because the settlement is on chain, which is an attack that has happened, been reported. I don't know if they're fixing it. But yeah, it's I think for everybody, I don't see it being, we're just gonna have to see. Like Hyperliquid is doing great, but CeFi have so many technical advantages into actually being able to make a system very low latency, the exchange to work very stable, in a very stable manner, which is extremely important for liquidity. Else you get only toxic flow.
Yeah. And right now we're like mostly, you know, like talking about short tail stuff, right? Like stuff that has a lot of liquidity and you know, it's traded in most venues. Like for example, half I wanted to understand like doing like liquidity and pricing for like long tail pairs, right? Like how do you guys go about that, and like what's your like general like stance on this?
Yeah, so to clarify, we don't have our own liquidity, right? We solve the cold start problem of liquidity by renting our liquidity from other venues. And so Hyperliquid, for instance, is great for some of these bigger alts, Bitcoin, ETH, etc., or maybe some of the newer hip 3 markets like oil, gold, etc. But then once you get down to the long tail of assets, you're capped by 3 to 5x leverage and not much open interest as well, right? You can trade like 100K in 2% slippage on some of these names. It's very bad. And so for us, the key consideration is just being liquidity agnostic and going to where the traders are. So that means integrating with Lighter next. It means integrating with Extended, etc., Ostium, and things like this. They offer a different model, the RFQ model, and I think it's a really interesting model for long-tail assets and RWAs in particular. So the likes of Variational, the likes of Ostium, they are key to really bringing some of these more esoteric markets on chain with deeper liquidity, and that's really exciting for the person that comes to Pear and wants to do some of these things in like the most random manner sometimes.
Yeah, it's I think the difference between like order book and like an RFQ, I think it's something that we should like dive deeper into more, because you know, maybe like the audience here is is not really like you know, like what is that and what's the difference. I think it's something we should like maybe explain a little better. Yeah, of course.
Sure.
Naturally.
Yes. They serve very different purposes. So an RFQ is a request for quote. You say, I want to buy X amount of this product. This quote goes to all the market makers or everybody connected to the RFQ. It's not always market makers. Everybody submits a quote. Here is the price I can offer, and then the highest bid gets taken or rejected. So sent to the user checks. Two very different purposes. So the order book is more for, usually what we see with RFQ is big orders that would actually make an impact on the price, or where you don't want to put a huge maker order and then every market maker says, okay, there is huge liquidity on one side, price is going to go up, and everybody starts skewing the price and your order never gets filled. This is to not leak information. But these things are very similar to OTC. They kind of serve the same purpose. OTC is over-the-counter deals. You go to a market maker, you go on their site. I think most of them now have automatic system. You request, I want to swap, I want to buy 1 million BTC. Here is the offer, here is the price, send the money, you'll get it. Different purposes. A good RFQ system okay, maybe we don't need to get into the details, but a good RFQ system is very slow, very natural for that uninformed flow. Like you don't want your RFQ system to have, usually it's best for the market maker to be able to have a last look on the trade. Else you just get ARPed and then everybody's afraid to give a good quote because you don't know if it's a market maker on the other side ready to murder you.
Thank you for explaining that, because I think that was needed. So we're approaching end, but in general, like I want to ask you, Madalina, like what is the type of trader that is using Ostium today? You know, is it more of a crypto native? Is it more like people coming from the outside, the real world?
Right. So I think both. It's anyone who actually wants to trade the macro narrative, who wants to trade whatever happens in the world and a real world trading asset. So that means on-chain users that actually want deep liquidity and they don't actually find it somewhere else. But also TradFi users that just want better execution, transparency and self-custody, but they don't need to be DeFi experts first. So we are trying to make things easy for them by onboarding them easily.
Wonderful. And I also want to ask Justin, like more of a provocative question here, like when you get approached with listing requests, with like the listing and what on Perps.fun, where do you draw the line, like between something that is me with a ticker or something that can work?
Yeah, one of the first things that usually crosses my mind is the Oracle design. Typically, some of these derivatives exchanges have a large amount of collateral at stake that needs to be protected very aggressively, and most of the people who are approaching and who want to launch these perps are well intentioned, but occasionally maybe the Oracle is not sufficient enough to support a solvent and healthy and robust market. An Oracle that has a single contributor of a price feed may not necessarily be the most reliable source. There are caveats to that. Perhaps if they are a credibly neutral like news feed that can, that is the source of truth of the Oracle. That's really what one of the things that that kind of is paramount. Additionally, it's depending on the exchange as well. It's the risk parameterization, whether it's the funding rates, or it could be a leverage rate, leverage that's permitted, or the open interest of the venue or the instrument. These are the things that are kind of that keep me up at night. Makes sense.
And on a more of a closing remark, it's we've seen Hyperliquid doing binaries now, and we've also seen Polymarket doing perps, right? So first and foremost, are you guys at Ostium considering doing anything else, or like working on is it just a natural event that basically platforms start to do multiple types of derivatives? And in general, like what's your guys' stance on this? Like should someone just focus on one type of product, or it's something that happens naturally that you start to support as many products as possible because maybe there's benefit in having that on the same platform. There's cross margin, portfolio margin across different products, and that can create like healthy benefits and so on and so forth.
I can chime in here. So we kind of married prediction market probabilities with perp liquidity. And so we have this feature now where, let's say the probability of the Strait of Hormuz reopening is currently trading at 40. If you set a level, let's say it goes above 51, trigger me a short oil trade. And you could do this across any Cauchy market, any Poly market, any HIP4 market, and build your own baskets, pair trades, or outright trades as well. And I think there's an interesting design space to marry prediction markets with perps. I think we're one of the first to really do that. But it's one of the more fun features on Pear Protocol.
It's actually a very different way to go about that, because it's, but yeah, in general, like to all of you.
It's going to be very funny when those prediction markets, brand new exchanges, very high latency, very high like P99 latency, start trading things that are very active and very competitive. I think it's going to be a bloodbath. I actually expected a lot of CeFi exchanges to jump on the prediction markets and leverage their existing exchange, fast infrastructure, onboarding, margin systems, like leverage everything, and they've actually been embarrassingly slow. I don't understand how this is possible, but yeah, embarrassing stuff really. But yeah, it's going to be super fun because those exchanges are not ready to handle these kinds of volumes, these kinds of speed of these established markets.
Justin and Madalina also want to hear your question, and especially you, because
Yeah, sure.
you're the only one that
Yeah.
has it.
Yeah, absolutely. So first of all, we've also tried 1 year ago to do something very similar to that, like based on predictions, to be able to like trigger certain orders on RWAs and trade whatever you wanted, from crypto to commodities to whatever, based on certain events. However, that didn't really took off, and I'm actually glad to see the way you guys do it here at Pear. And maybe in the future you could do the same thing with Ostium as well. However, from our perspective, we don't really know if by the next year the next big thing is going to be just another type of derivative. From our perspective, people don't wake up saying, oh my God, I want to trade a derivative. They want to trade something that happens in the world, right? Oil is breaking out, gold is moving, the dollar is weak. So from our perspective, RWAs are here to stay. What I believe we're going to see in the next year or so is an uptake in AI agentic trading. I believe that we're not going to be designing for humans clicking buttons anymore. I believe we're going to design for humans using AI agents and bots that understand the markets and can even place trades. And now, SDKs, APIs, good documentation, these things are more important than ever. These are your second interface because this is why AI understands and builds on. And then portfolio management is going to be the most important thing for all of our platforms because humans need full control of their risk and their positions. So this is sort of, my personal perspective. But yeah, there you go for other derivatives.
Dany, earlier you said something about these prediction markets. They really are binary options, right? Yes. And these binary options have an implied volatility. Mm-hmm. And Huff, earlier you said regarding people want these conditional trades based on price. I could imagine maybe some API traders want conditional trading based on implied volatility pricing instead of a dollar pricing. And then this all goes back to the agentic stuff where how do we marry these three concepts together at some point? And I think that's the real direction of where this market's actually going. Everyone's becoming the market maker.
I wish that was possible, but I have a hard time believing my returns will be similar to the ones of a market maker, even with APIs and stuff like that. But I hope that is a possibility. So we just have like 2 minutes left. One after the other, in no particular order. What is, let's assume next year we do the same panel again, like same speaker, same set. What will have changed that in insight was obvious, basically? Like if you try to think 2027, same date, what will have changed the most? What is, you expect?
Yeah, I already said,
I
think I can pass to my colleagues.
I think we'll see at least a 10x in open interest and volume, I think, across the board, maybe a year from now.
I really expect commodities to kick it off, and for the whole, I want to see more exotic things. Binary options are already very exotic derivative, but there is so much more you can do, and I expect that we will see these new players in the space, new exchanges that lean a lot into the gambling part, which may be good, maybe bad. But yeah, super unexplored territory. Everything is very slow and very boring right now on these exchanges.
Yeah, and the final piece for me, I think where this is going is trading is becoming a form of entertainment. And so to your point of trading being a form of gambling, I think you see like content, you see more streams, you see much more things like Euphoria and tap trading. And you're in this world where everybody is trying to escape the permanent underclass, and they are betting and using these platforms. And so I think you're going to see much more proliferation of trading and entertainment.
And regulation.
All right. I think, I don't know, if anyone has any question, like Flash, well, I'll be, here you go.
To any of you who wants to answer, according to your internal experience, how fast is alpha decaying in the trading strategies today compared to a few years ago? Because clearly the number of players has increased in the space, right?
To who was the question directed to? To anyone. Anyone who wants to take it up, like, feel free.
I'm a code monkey, sorry, I don't understand. But I would, so from a very high, and take this with a very big grain of salt, usually the things that have economic sense tend to persist more. And there is a lot of noise with people saying, oh, look, I found this alpha, and then it just disappears after a few days. You found dust, like you found nothing. Yeah, that's...
I think it depends on the type of alpha. I'll leave it at that.
Cryptic. A cryptic closure for a cryptic panel. No, there's another question.
I mean, I'm referring especially to the wording that you used, that people today want to trade events. Okay, for example, there's a macroeconomic event, they want to trade it. The point is that I'm seeking an opinion from all of you. Where would you put the threshold up to which, I mean, when we cross it, we are in gambling. When we not cross it, we are in, like, I don't know, investment, finance, trading. I mean, the point is that I'm trading a macro event. I'm also trading, like you said, an outcome of a football match, that the sports stuff is like the one striving to the skyrocketing in prediction markets. So what is actually gambling in your opinion, what is not?
Great question, by the way.
If you know what the stochastic process is, then you're moving further away from gambling and more towards non-gambling. If you have no idea about any of these things, you're in the gambling group of people that just lose money.
We could be trading the same instrument, whether it's a perp or a binary option or a vanilla option, but we are making money on different components of that instrument. Maybe I've sold you the Tesla perp, but I'm short the Tesla perp at a second venue, and I'm really making money on the funding or the basis. Or maybe I've sold you a vanilla call option. Yes, you're making money in the Delta, but you're losing money to me on the Vega. We're trading different things, but we may not know it. Or one party at least may not know it.
From my point of view, and perhaps a little bit less technical than your view, guys. First of all, at Ostium, we're having we're having markets that are very similar with the traditional markets that you see in TradFi. Second of all, risk management is incredibly important. Positions management and portfolio management is incredibly important. So we are trying to do that as clear as we can for the users to adjust based on their risk appetite. And Otherwise, I think it's a very fine line between whatever means like gambling and trading for whoever. There are people that are more sophisticated and people less sophisticated. Right now, at the minute, on our platform, we have isolated margins. So right now, users are quite protected. But we plan to change that, however, because otherwise we can't access like more sophisticated strategies. So that's going to be actually in the plan.
Apologies for every other question, but we have to close. We're already 5 minutes late. I don't want to let other people wait. Thank you, everybody. Thank you very much. Very, 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 very interesting time.